Why the smart money is buying Alibaba stock. Watch if you want crazy gains. Shares of Chinese e-commerce giant Alibaba are experiencing a moment of bullishness not seen in a long time. Hounded by a long series of regulatory issues and pressure from the Chinese government, Baba has fallen as much as 60% from its historic peak in mid-October 2020. Welcome back to Investor Secrets. In this video, we're going to talk all about why the smart money is buying Alibaba stock, and what is the reason that billionaire investors are so bullish about the e-commerce giant. So let's get right into it. With the Chinese middle-class population forecast to double to more than 600 million over the next 5 years, which in turn increases consumer spending, it's not difficult to see why the smart money is investing in Alibaba. Alibaba was founded during the 1990s by Jack Ma, who realized at that time China lacked technology in the business world. Value investing strategy. The investment strategy known as value investing, invented by Benjamin Graham, involves buying stocks that have the potential to generate long-term value and that are apparently trading below their intrinsic value. One of the most well-known followers of value investing is Charlie Munger, vice chairman of Berkshire Hathaway, the conglomerate controlled by the legendary Warren Buffett. Munger recently doubled his Alibaba position within the portfolio of his own company. Munger has been taking advantage of Alibaba's dips, using them as opportunities to load up on more shares. According to reports from DJCO, Munger bought 300,000 BABA ADRs during last year's fourth quarter, plus 302,060 in the third quarter. That's a total of 602,060 Alibaba ADRs during 2021. The idea that Alibaba may fit well into a value investing model pleased the market and added fuel to the rally. Many investors closely watch the moves of famous investors, and Charlie Munger, at 98 years of age, has an abundant experience and boasts a very impressive track record. Despite price cuts, Wall Street remains bullish. The consensus on Wall Street is that Alibaba stock is a strong buy at current levels. Notably, several investment firms have recently lowered their price targets on Alibaba. They've cited various concerns, including slowing growth in online Chinese consumption. Still, the median price target is $196.98, indicating an upside of 70% from the current price of $116. Big banks such as Barclays, for example, which offers a $247 price target on Baba, see the e-commerce behemoth as a top pick in the Chinese tech sector. Also bullish on the long-term outlook for Chinese market development, Goldman Sachs has a price target of $215 for Baba and sees more than 100% upside ahead. Citigroup offers a very similar price target of $216. Some more smart money. Alibaba is now one of China's largest companies, listed in 2014, and today is highly profitable with a market capitalization of more than $2.51 trillion. Alastair McHugh, a product specialist at Baillie Gifford, is attracted to Alibaba because of its strong position in e-commerce transactions in China, where its market share is more than 60% by gross merchandise value and likely to rise further. He also likes the fact that the original co-founder and visionary, Jack Ma, is still involved in the business. It's clear that consumption is now a big driver of economic growth in China, and online retail is an important driver of consumption growth. Alibaba's dominant position means it's well placed to capture this growth. Opportunities on a large scale. The scale of the opportunity is extraordinary and underestimated by certain investors, particularly some from the West, who still consider China as a risky emerging market. But McHugh suggests that those who still treat China as an emerging market are overlooking the fact that the addressable market for Chinese consumer spending is 1.3 billion people. Almost 1.3 billion packages were delivered by Alibaba from Singles' Day orders, and of those, 960 million were delivered within 1 week. This is equivalent to 2.3 times the combined online sales of Black Friday and Cyber Monday in the US. It reflects the strength of Alibaba's digital economy and of Chinese consumption power. Joe Lai, a portfolio manager at Platinum Asset Management, notes mobile monthly average users on Alibaba's retail marketplaces in China reached 824 million in December last year, an increase of 39 million from the previous quarter. Beyond the e-commerce business, Alibaba operates the largest cloud computing business in China, called Alibaba Cloud. Many believe that this business can ultimately become the largest division within the company, despite it currently representing less than 10% of overall revenue. Coronavirus effect. A fascinating aspect of Alibaba's recent quarterly earnings update related to the company's involvement in procuring and delivering 40 million units of medical supplies worth about $100 million to Wuhan, which has been hit by COVID-19. This shows a company that is so much more than an online retailer. Lai points out that the Alibaba ecosystem keeps delivering new sources of value to shareholders. Amid the COVID-19 lockdown in China, Alibaba's new enterprise communication app, DingTalk, has achieved new prominence. Alibaba introduced a new digital health check-in feature on DingTalk, which as of February 2020 had recorded more than 150 million daily health check-ins. While currently investors are obsessing over COVID-19, Alibaba management said, 17 years ago, the e-commerce business experienced tremendous growth after SARS. We believe the adversity will be followed by changes in behavior among consumers and enterprises and bring succeeding opportunities. We have observed more and more consumers getting comfortable with taking care of their daily living needs and working requirements through digital means. With the huge growth in China's middle class and online commerce in coming years, combined with Alibaba's dominance across retail, financial, and computing businesses, it's clear to see why the company is in platinum and Bailey Gifford portfolios. Investors can of course buy Alibaba directly either on the Hong Kong or US exchange, and can also gain access to it through managed global funds. Are better days ahead for Baba stock? In addition to its restructuring, Alibaba is landing on a growing list of stock picks for the year ahead, with top Wall Street analysts naming Baba stock as one of their top ideas for 2022. Investment bank Goldman Sachs continues to be bullish on Alibaba and bought 5.87 million shares of the company in this year's second quarter, making Alibaba its fifth largest holding. Additionally, Alibaba recently got a big vote of confidence with New York University's Aswath Damodaran, who is known on Wall Street as the Dean of Valuation. Damodaran said he's now ready to buy shares of Alibaba at current levels as the stock has become extremely undervalued. Buy Baba stock for the long term. There are analysts and commentators who say that investors should avoid Chinese stocks at any and all costs, given the unpredictability of the government crackdown. However, it's difficult to ignore the fact that Alibaba stock is trading at rock-bottom prices right now and that the company's long-term potential is huge. Often referred to as the Amazon of China, Alibaba remains a leader in all of the markets in which it operates. With its renewed focus on growing internationally and a commitment to outpacing its competitors, Alibaba does indeed remain a compelling long-term option. However, investors who take a position should be prepared to ride out periods of heightened uncertainty and volatility. Baba stock is a long-term buy. The bottom line: Alibaba faces a challenging macroeconomic background, significant regulatory pressures, and an expected slowdown of consumption in China for 2022. Nevertheless, it is undeniable that, when compared to its competitors, Alibaba's valuation seems to be quite attractive. Alibaba's fundamentals have changed little since its share price peaked in 2020, and the significant devaluation of its stock during 2021 may have been largely unjustified. Meanwhile, 2022 has started well for Baba, and the stock has been blessed by smart money. We think that portends good things for Alibaba's future. If you guys enjoyed this video or think it was valuable, then don't forget to hit the thumbs up, subscribe to our channel, and hit the bell icon to get notified first. Also, feel free to let us know your thoughts about the next video in the comment section down below. See you soon. Bye!